Hello fellow chartists, welcome to my YouTube channel. I am the Chartist. Happy Sunday. I usually cover the indices, but today I'm going to cover some big cap stocks that I listed in the title of this video. So let's get into it. Price action technical analysis, guys. It's not prediction. We're just going to go over the different scenarios and the different levels that we're going to be watching. If it holds, if it breaks, what are we going to do? What's our sentiment going to be? That is what it's about. So here you are seeing a daily chart of Apple. Definitely going to cover Apple because to me, Apple is a market moving stock. It's pretty heavy in the SPY and other indices. So when this stock goes down, it's going to definitely affect the indices. If it goes up, it'll definitely affect the indices. So what we are seeing right now, since January, Apple was in a downtrend, okay? It looked like an ABC move to the downside, and it made a nice relief rally, nearly retesting the previous high. Okay, so remember in downtrend you got lower lows and lower highs. Apple nearly tested the previous high. That right there is bullish price action because it shows me that there's a break of structure. Okay, because as of right here, since January, the structure was that there was a downtrend, but instead of continuing to make lower lows and lower highs, it came and tried to retest a previous high. Okay, but like anything, it's not 100%. We need more confirmation. So what we're seeing, these are my fib levels, and you see here on January 31st that Apple took out a very critical level. This was the 61.8 retracement. I've said this in previous videos, and I'll say it again. Usually in strong downtrends, when the stock usually make a correction, before they make a new low, they usually go back and retest the 50 to 61.8 retracement, and then usually head down lower to a lower low or a previous low. This breaking it back here on January 31st, breaking it and then retesting as support was seriously bullish. Okay, because it took out that critical resistance, treated it like support, continued to give us some more closes. Now, this one was a little iffy right here. This was February 4th trading candle. A little iffy. It got a little below it, right? It got a little below it, but some way, somehow managed to close at 172.39. That fib level is 172.24. So technically, we still got 1, 2, 3, 4, 5 closes above that 61.8 retracement. You would think that's very bullish. I think so. Okay, but look at this move right here. This relief rally, nearly a straight line to the upside, nearly. So of course, seeing some basing, like a lot of you guys already know, is perfectly healthy. What we want to see is 172.24 continue to hold to leave 177 in play. If we lose that support, bulls have one more chance to make a comeback around the 50% retracement at 168.88. If we lose that level, that's pretty much a false breakout of this critical level, and that's very bearish, and we will most likely see more downside level to level, and we will most likely retest either the previous low or give us a new low. So like I said, if we lose 172.24, 168.88 is in play for the next support to bounce. All right, and if it does bounce, this could look like an inverse head and shoulder. Head here, this was the left shoulder. Will we get that right shoulder? All right, and usually in that type of trade, you want to buy the break of the neckline. All right, which would be up here at the 78.6 retracement, 177. So obviously, Apple above 177 is extremely bullish. We'll put all-time highs in play and possibly give us new highs, a new all-time high. Holding above 172.24 or bouncing off 168.88 is bullish as well. Okay? Below 168.88, if I see we lose that support, this is a daily chart, right? So if I see we lose that support, and then the next day that support it gets treated like resistant, we most likely lost, that level, and we are most likely heading down to lower lows. Okay, So 168.88, the 50% retracement level will be my equilibrium for being a bull slash bear. Above it, I am a bull. Below it, I am a bear. Okay, guys, keep it that simple. I know it's not easy, but keep it that simple. You look at the price. If it's above it, be bullish. Below it, be bearish. Okay? And please trade with a chart so you can see what's going on. Okay? Otherwise, you just be trading blind. Take a look at FB, Facebook. Now, this is very interesting because they failed their earnings report and we got this big old dump. Okay? The day that they had earnings, it was all the way up here. It closed at 323. The next day, goodness, it opened at 244 and closed at 237. All right? 237, it's a very critical level. All right? We closed above it. We dropped a little below. It was a very critical level. We got two closes at that level. But the next critical level for that I want you guys to pay attention to is this level right here, the 61.8 retracement. As a matter of fact, Friday's low was around 230. So it got a little lower. It broke below that fib level but managed to close back above it. Very interesting. So we saw some strong demands in that level. Okay, some strong demand. So got the swing low all the way back here. I started the swing low March 2020. And the swing high, which was the all-time high, all the way to the high of September. Okay? And this little gap down, gapped all the way down to the 61.8 retracement. So like with bear trends, bull trends, because this technically is a bull trend when you zoom out, okay? Bull trend, this is a critical level and usually where it corrects to. All right? Bull trends, it's okay to have some corrections. A lot of you guys like corrections, right? Because it gives you a better buying opportunity. And it usually corrects all the way down to the 61.8 retracement before starting a new impulsive move to the upside. Well, not only did we bounce off that 61.8 retracement, we had a gap that was all the way back in August of 2020. And it got filled. Okay? And now we got this big gap all the way up here to 300 something. All right? Facebook, to me, is looking prime to make some type of relief rally. All right? The RSI is extremely oversold right now. We are bouncing off a critical support level. We filled a gap. It's looking like it's giving us signs that it wants to head back to the upside. However, price action is king. As long as 231.74 is in play, we're going to play this level by level, which keeps 261 as the next price target. As long as 231.74 holds, 261 is the next price target. And I will continue to be bullish to that price target and play it level to level. And we'll see if the gap fills. I will switch my sentiment to bearish if we lose 231.74. If we lose a 61.8 retracement, it is most likely we're going to head down to the next level, the 78.6 retracement at 189.96. And if that is lost, have a critical support level down here, this yellow support line right here around 155. Now that support level started for December 2018, connects to the March 2020 low, and we have not gotten a third touch. So will this be the time where we get the third touch? Well, we'll see. But as of right now, that 231.74 level needs to hold and is very critical. So above that level, I am bullish. Below that level, I will switch my sentiment to bearish. Okay, guys, that's what I got on FB. So I covered Apple, I covered FB. Let's take a look at Amazon. Amazon actually did good on their earnings. Okay, so Amazon been on a relief rally since the end of January, came up and retested this blue falling trend line. This connects the all-time highs to the January 4th high, and we got another touch here on Friday. It tried to break above Okay, as you can see, it tried to break above, but it was met with selling pressure when it hit that 50% retracement level right here, around 32.36. It fell right back down. So we never actually quite got the breakout. It tried. So we'll continue to monitor it and watch it and see if the breakout will happen. All right, support, immediate support right now is 31.11, which makes the resistance up here around 31.70. If we can get the breakout, if Amazon can actually close on the daily chart above 31.70, that's pretty bullish. That's the start of a bullish move. And the next price target would be that 50% retracement again at 32.36. And above that, we'll put 33.61 in play for another critical resistance that we may see some selling pressure at. But if we break above that, of course, we are bullish, because the more and every time a stock breaks a resistance, that's bullish price action. Keep it that simple. Should you buy the breakout? I do. Cut your loss though if it's a false breakout. Anyways, so for me to be that's the bullish scenario. We get the breakout, okay? If we lose in support, that's bearish obviously. 31.11.96 is the immediate support right now. If that is lost and then get treated right resistant and heads down, we lose that support level. It's most likely going to head down lower to the next support level at 29.57. I'm favoring a new low though. All right, because in the downtrend you get lower lows and lower highs. If this right here is a lower high, there's a chance that we will get a lower low. All right, not guaranteed, because we can always just get a lower retest a previous low. Okay, or this could be the beginning of a new trend where it give us a new higher low and then continue upwards. Anything can happen. Those are the 3-4 different possibilities. Okay, that's why we got to play it level to level. All right, so above 31.70, I'm bullish. Below 31.11, I am bearish. Anything between those two numbers is just choppy noise. Okay, it's just gonna chop, and it's tough to trade choppy price action. That's why I'd rather just wait for the stock to make a decision. Okay, and I'll just trade the direction that it chooses to go. All right, so that's what I got for Amazon. What else I got? NVDA. Had this flag for a while for NVDA, which they lost back in January 19, and they recently tried to recapture it. They tried. I think we had one close above it. As you guys know, one close above a level is not good enough. The next day, we want to see follow through. We break above it, we recapture it. The next day, we want to see that recapture level be treated as support and still close above it. Well, as you can see, the next day, that recapture level got treated like resistant. And Friday, the yellow resistant line of this flag, it was support, but now it's resistant. It got tested as a resistant, but still managed to close above the 23.6 retracement level. Okay, so for me to be bullish, I like to see this yellow flag right here be recaptured officially again, which has to be a close above 246. Okay, and then I want to see follow through in the next day to put 261 in play. All right, that's the 38.2 retracement. But if this level continues, if 240, what level is that? 245.8, 246, right? 246 continue to be treated like resistant, and then we lose a 241.68 level, that's going to be bearish, guys. So play the levels and bet to the downside. I'm not telling you what to do, okay? I know it's all I'm telling you what to do. I'm just telling you what I would do, okay? I like to short when a critical support level is lost. That's my favorite time to short, okay? Support level is lost. Support level get retested as resistant. Boom, entrance. Still got to manage risk because it's not always guaranteed. Give yourself about a 10-point zone for stop loss. 10 points like $1. Maybe 13 points. Because sometimes with volatile markets, you got to, make your stop losses a little more range. You got to give them a little more range. You set them too tight, market makers, they could see our stop losses. They could see when we set our stop losses. You set it too tight, they're going to go hunt. They're going to stop you out, take your money, and then they're going to push it in the direction that they really want to go. So sometimes you got to make them work a little harder by increasing the range of where your stop losses are. Tight stop losses can work sometimes and help. Other times it just works against you. But that's on you as a trader to figure out. Okay, so let's keep this simple. Above 246, I'm bullish. Below 241.68, I am bearish. All the way down to the next support level down here around 231, 232. That's a nice 100-point move to the downside, guys. That's a decent move. All right. You can make good money with options, just making like 10, 20, 30-point moves. But a 100-point move, the more money, the better, right? Anyways, still got to manage risk, and that's what I got. Keep it that simple, okay? Now, last but not least, I'm going to talk a little bit about Microsoft. Yep, the pivot high. This is a downtrend right here. I did the fib level like a downtrend. So swing high up here, 344.6 around there. Swing low, around 275.83. And what we got here, well, we had one close over here on February 2nd above the 50% retracement. Unfortunately, we lost it, and now Microsoft is bouncing around the 38.2 retracement. That's at 302.10. All right, gave us a close above it, recaptured it. Now it's just chopping between that level. Okay, so I want to see what decision it makes. Okay, if it breaks below the support, 302.10, obviously got another 100-point move to the downside at 292. We break above 310, we got a nice 80-point move to the upside around 318. Okay, play it, keep it that simple. As of right now, I mean, we look back a little bit, you can clearly see that we are overall in an uptrend. Yep. So yeah, but anyways, we play it level to level. Below 302, I think we'll drop another 100 points to 292, and bulls could have a chance to try to bounce it from there. And then below that, obviously the previous low or lower. All right, this downtrend could continue. This level right here is technically a lower high to this and this one. Okay, so for me to be bullish, I like to see above 310 and break this previous high right here. This high right candle right here is at 315. So Microsoft above 315, you know, we still got another 30-point move to the next resistant level. But above 318, which is a 61.8 retracement, very critical. Above that level, I will have no doubts we're going to head back up to all-time highs. All right, but for now, hard to forecast when price is choppy like this. Okay, but either way, we're going to play it level to level like we always do. 302 support. If that's lost, another 100-point move to 292. All right, we got resistance at 310. If we break that, another 80-point move to the 61.8 retracement at 318. All right, so that's what I have for you guys today. Friendly reminder, guys, I do have a Discord. If you like, you know, trading these big cap stocks, I'll definitely cover them in the Discord upon your request, or anytime I see a trade setup that I fully believe in. Okay, quality over quantity. And of course, I always cover the SPY. If you love trading the SPY, definitely join the Discord. If you love option flow, all my members got access to my option flow. And what else? Market reports from a 25+ year trader. Any resource I have, I put it on the Discord so that all my members have, and they can use it as their own. All right, guys. And of course, I got your back. Real time, price action, technical analysis. Well, I hope you found this video valuable. We got a new week of trading starting. It's going to be great. You guys are going to be profitable. I can feel it, whether it's with knowledge or with money. Hopefully both. God bless. Thank you for watching. See you soon.